What's up, everybody? And in today's episode, I'm coming at you late on a Thursday. Why? Because Amazon just released its Q4 2024 earnings report. Why do we care? Even if we can't afford to hold Amazon stock, well, we care because this is the best direction that we get as sellers all year for how much Amazon is milking us as sellers in FBA fees and advertising costs. So in this video, we'll break down just how much Amazon is taking from us sellers. So when I dive into these reports, there's basically two things that I want to look at as both a stock analyst and as a seller. And I should actually make that three things. So the first thing I always look at is Amazon's online store revenue. And what I like to do is pop over to Ecom Crew's historical trending financial analysis of Amazon's earnings report over the last 4 to 5 years. Okay, so let's hop over there, right over in this tab right here. And if you're listening on the podcast, well, I highly encourage you to check out the YouTube video because you can get a much more graphical representation of what I'm talking about here. But if you're listening on the podcast, I'll try to describe it in as much detail as possible. So the first figure we want to look at is basically Amazon's online store revenue. Now, Amazon does not report overall revenue for both first-party sellers and third-party sellers. Basically, how Amazon accounts for third-party seller revenue is only in the fees that it takes from us. And we'll tackle that in a second. So when they're talking about online store revenue, which is what I'm looking at here on the screen right now, online store revenue is basically 1P sales, so vendor central sales. And for Q4, Amazon's revenue was about $75 billion. And compared to Q4 in 2023, it was about $70 billion. So overall, their online store revenue growth was about 7%. Now, really interesting, that growth as a percentage is actually some of the slowest that it's had over the last several years. So if we just click this online stores year-over-year growth percentage column right here, we can see Amazon's growth over the last several years. So we can see that during COVID, it was around 13 to 20%, all the way up to 40% in some quarters, and now it's hovering around 7%. Previous quarter in Q3 2024, their growth rate was about 8%. So overall growth has slowed a little bit. Now again, that's vendor central sales, 1P sales. So it doesn't necessarily mean that overall sales volume is down on Amazon, but it is some good indication of what kind of growth they're seeing. Now, like I mentioned, how Amazon accounts for third-party sales is strictly through the fees that it collects from us. So it doesn't report on our actual revenue when we sell. If you sell a widget for $100 and Amazon takes $20 in fees, Amazon records $20 in revenue, not $100 in revenue. So I'm going to pop over to the historical performance of Amazon's FBA fees. So how much they're collecting in FBA fees over the last several quarters. And again, on this page on products.ecomcrew.com, we have a great visual representation of Amazon's FBA fees that they've reported over the last several years. It just gives us a nice overall idea of where that trend line is going. And I probably don't have to tell you, but that trend line is going up. So in Q4 2024, Amazon collected $47 billion in revenue from us sellers. And in Q4 2023, it was $43 billion. And if I'm not mistaken, I believe that is a growth rate of about 9%. So what I'm going to do is I'll again go down to this page. Sorry for you guys listening on the podcast that you can't see this, but I'm going to click down just to see what that overall percentage is. And I do believe it is about 9%. So yeah, pulling that up, I was right, it's 9%. That's compared to Q3 of 2024, where it's about 10%. And looking back to COVID, it was about 60% year over year or quarter over quarter growth that Amazon was seeing in FBA fees. This tells us two things. Number one, it looks like Amazon's overall revenue growth for their retail arm is about 9% per year, 7, 8, 9%. So again, I just reported on Vendor Central sales. That was 7% year over year growth. And now we're reporting on FBA fees, which is kind of Amazon's kind of barometer for what it's collecting from third-party sellers for revenue, and that is about 9%. So it's somewhere in that 7 to 9% range that Amazon seems to be growing. The other thing is, FBA fees are an indication of how much Amazon is collecting in fees from sellers, and it's an indication of how much those sellers are selling. So if Amazon third-party sellers were doubling their revenue year over year, then we'd expect this percentage to be going up roughly twice. It's also some indication, like I mentioned, of how much more Amazon is milking us in fees. So we can't really peel back that onion and figure out which is which when it comes to this figure. Is that 9% sellers just growing 9% year over year, or is it sellers being flat for their revenue and Amazon just collecting 9% more in fees? We can't really tell. Stockholders, they don't really care. All they want to know is Amazon collecting more in fees? For us, though, as sellers, it'd be really nice to know, is that growth that Amazon is seeing in FBA fees that it's collecting, is that because their sellers are just selling more, or is it because Amazon's milking us more? If I had to make a hypothesis, I would say that overall, third-party sellers are probably growing in terms of revenue at roughly the same pace as 1P sellers, Vendor Central sellers, which would be about 7%. So if we assume that third-party sellers are growing at about 7%, but FBA fees grew at 9%, it means that roughly 25% of that fee increase is from increased fees. So is that right? Is it wrong? I don't know, but I think that's probably a fair estimation that Amazon has probably increased fees somewhere in the vicinity of 20 to 25%. And overall revenue from third-party sellers has grown probably about 7%. I know that's a lot of numbers there. Sorry, especially for those of you who took Math 12 3 times like I did. But hopefully it gives you guys some idea of how much growth you should be seeing as a third-party seller. My guess, probably overall Amazon's growing about 7% year over year, just in terms of pushing more merchandise. And probably FBA fees went up 20 to 25%. That's my gut feeling. Let me know, though, if you disagree or agree with that hypothesis. Now, the other most important thing we want to look at as sellers, and this is probably the most important one, is advertising revenue. Why? Well, number one, advertising revenue, as we'll see here in a second, it has been outpacing FBA fees hand over fist. So that is where Amazon's really collecting most of its increased fees, is through advertising revenue, not necessarily FBA fees. Now, I know placement fees and everything got a lot of attention over this last year, and rightfully so. It was a big added expense for us as sellers, but it's advertising revenue where Amazon is really milking us sellers. So you guys are going to see that here as I pull up this chart. And again, if you're listening on the pod, I know you can't see this chart, so let me just try to give you a best description of what's going on here as possible. So for people watching on the video, it's pretty clear. This trend line is up and to the right very starkly. So Amazon collected $17.2 billion in advertising revenue compared to $14 billion in 2023 Q4. That's up about 18%. Now, if I could superimpose Amazon's advertising revenue growth over top of their overall online store revenue growth, it would be pretty incredible. Basically, online store revenue growth has been flat as can be for the last several years, but advertising revenue has been going up and up and up and to the right. So this is where Amazon is getting all of its profit growth. And this whole thing about placement fees, in my opinion, it's been a bit of a red herring. It's not placement fees where us sellers are getting murdered. It's advertising fees, which is where we are getting murdered. So just imagine that you have 10% ACOS, or not ACOS, tacos in 2023. Well, your tacos just went up roughly 20%. So your tacos went from 10% to 12%. And that's just the average overall for all sellers. Maybe you did better than that. Maybe your tacos only inched up a little bit. But for the vast majority of people listening and the guy doing this podcast slash YouTube video right now, that is true. Our tacos went up about 20% across the board, across all three brands that we operate. There's another reason why this is really important. So, when stock analysts and stockholders are looking at Amazon's performance, there's basically two things that they look at. I'm going to pull up this ESPN, CNBC article. It would be great if ESPN started reporting on Amazon, though. I'm going to pull up the CNBC article, and basically it summarizes what stockholders are looking for when they're looking at Amazon's earnings. They are looking at two performance metrics. And let me tell you, it's not FBA fees that they're looking at. They're not even looking at online store revenue growth. They're looking at two things. They're looking at number one, AWS, and number two, Amazon's advertising revenue and their revenue growth. Why? Because stock analysts see Amazon as being two things as a company. And let me tell you, it's not a retailer. The two things that Amazon is number one, a cloud computing platform, and number two, an advertising platform, just like Meta and just like Google. So CNBC said that Wall Street is looking at these key revenue numbers: Amazon Web Services, which was basically as expected, $28.8 billion, and advertising, which had an expected revenue of $17.3 billion and actually exceeded those expectations and achieved $17.4 billion in revenue. So in other words, Amazon is overachieving in how much it takes from us sellers in terms of advertising. So in terms of overall stock performance, as I'm recording this, their stock is down about 4%. And a big part of that is because Amazon basically underwhelmed investors and said that its expectations for 2025 are a little bit lower than expected, basically because of the strong US dollar. Unfortunately, they didn't really give us any guidance in what they're expecting for retail growth. They're just basically saying that, yeah, we expect our overall profits to be down because of the strong US dollar. So let me just give you a quick summary of some of the other announcements that Amazon made during its Q4 earnings call. There's always a couple little interesting tidbits there as well. Okay, let's read off some of these PR snippets which Amazon's delivered here. You can read into these as much as you like. This is basically, just a big PR push by Amazon, but sometimes there's some interesting little tidbits here. So, number one, delivered at its fastest speeds ever for Prime members in 2024. Amazon seems to say this in every earnings call. We're faster than ever. Okay, that's great, and it's probably believable. They never give any actual statistics to back that up, but be it as it may, that's what Amazon's claiming, their fastest speeds ever for Prime members. Delivered over 65% more items to US Prime members the same day or overnight than in Q4 2023. Again, this is one of those ones which looks really good on the surface, which Amazon's claiming. At first, when I read that, I'm like, what? 65% more items to US Prime members? No, that's 64 or 65% more same day shipping to Prime members, which doesn't really mean anything. Probably they put that in there to kind of cloud over the fact that, their overall actual sales weren't that good, but hey, we're shipping stuff quicker. Number three, held a record-breaking Black Friday week and Cyber Monday deal event that was also the largest ever for independent sellers in Amazon's store. Ooh, man. I wish I had their Q3 earnings report in front of me, because Amazon was pretty opaque in their Q3 earnings call and said something along the same verbiage, kind of alluding to the fact that, hey, we did really well during Prime Day, but didn't actually substantiate it at all. And this is even more opaque. So held a record-breaking Black Friday week and Cyber Monday deal event. Blah, 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 blah. What does record-breaking mean? Like record-breaking in terms of sales of garlic presses? Record-breaking in terms of sales? Who knows? Amazon doesn't really substantiate that. And then just reading the last couple, number 4 was named the lowest price U.S. retailer by Profitero for the 8th year in a row. Not really surprising. Again, probably not great news for third-party sellers. We'd love to see Amazon being ranked the most expensive retailer by Profitero. That would be a great sign for our margins, but nevertheless, Amazon continues to be the lowest priced U.S. retailer for the 8th year in a row, and no surprise there. Yeah, I don't know about you, but we have not been increasing our prices very much over the last couple of years. And then the most, I guess, interesting one, this isn't news, but I guess it was a big event for Amazon in Q4. They launched Amazon Haul, a new shopping experience in Amazon's US shopping app and mobile site with ultra low prices. Would have been nice if they gave us some indication of how Amazon Haul is doing. I haven't heard much about it since they released it. It almost feels like it's Amazon's forgotten stepsister, which, probably they're leaving a little bit of money on the table. So, with all the stuff going around with Section 321 tariffs being removed and Temu and Shein now being at a disadvantage, I think it's a bit of an opening for Amazon and Amazon Haul. They pushed it a little bit harder. So, we'll see. Maybe it will continue to increase in popularity as time goes on. But unfortunately, in this earnings call, we don't really get any direction of how Amazon Haul is doing, which for third-party sellers, probably not bad news because Amazon Haul is really aimed at Chinese sellers. All right, there you guys have it. There's a quick little summary of Amazon's Q4 earnings. I guess the two big takeaways from this: online store revenue, basically retail sales, kind of flat at around 7% a year. FBA fees, kind of flat as well, which is probably either good news or no news. And advertising continues to soar at 18%, which not surprising, and that's just the overall trend that Amazon's been having for the last several years. Seems advertising is growing about 20% year over year. So I hope you guys enjoyed that, and until the next one, happy selling.